In today's trend report, in addition to viewing the market from a viewpoint of capitalization and a viewpoint of sector subsets, we're also going to talk about world happiness and what that means from an economic standpoint and how it is so dependent upon people being rewarded for intelligent risk and for intentional effort.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Hello and welcome once again to the Trending Report from USA Financial. Today we're going to be calculating out or referring to data calculated out through September 9th of 2022, so last Friday, based upon when I'm having this discussion. And the general premise that we like to take at the Trending Report is the fact that trend lines top headlines, meaning that you can see all kinds of different hype in the media, but the real question is what's going on within the market itself, and then oftentimes that spills its way out into everything from the economy to politics and everything else. So today, again, we're going to be looking at data from September 9th, or at least the end point of September 9th, and we break that down into three different time frames. We take a macro approach where we're using weekly periods of time within our calculations. We take a micro approach where we're looking at daily periods of time inside of our calculations. And then we split the difference in what we call meso with a 3-day period of time inside of those calculations. And then what we're going to do is we're going to take a perspective from the viewpoint of capitalization, looking at large cap down to small cap and what's driving the market. And then we're going to do the same thing in the world of sectors. There's 11 different sectors that make up the overall stock market, and we're going to see how those sectors are helping to drive or, as the case may be, pull down the market. And then we'll take kind of a broad look at economic wealth and happiness across the globe. I think it's kind of interesting to see that, especially in light of today with what we've got going on with the invasion of Ukraine by Russia and that war and how that spilled into energy and interest rates and everything else that's going on across the globe. So with that being said, let's first take a look at capitalization. So on our capitalization chart, again, here we are with macro, meso, and micro, as I mentioned. The overall stock market, which is kind of the baseline to take a look at how things are trending either up or down from that, is represented here in the blue. This is the U.S. total stock market here in blue. And then right here, this 1 to 3 month T-bill, think of that as cash. So here's cash in the number 3 spot on macro, down to the number 7 spot on meso, and back up to the number 3 spot on micro, whereas this overall stock market itself has stayed relatively steady throughout. Down here at the bottom, we see the overall bond market or the aggregate bond market, and that's been right here at the bottom on all three categories of time frame. And then international stock, how we compare against the rest of the world, down at the bottom for macro and micro, but then does bump up here a bit. Or macro and meso, I should say, it's down at the bottom, and then it does jump up a little bit over here on the micro. But what's most important on this particular score chart for today is that the mid caps are winning the market in all three time instances. So the Standard & Poor's mid cap 400 being represented here in all three, and very specifically, it's mid cap growth is what's winning the day in all three time frames going across the board. And then the overall index itself is coming in the second spot in each instance. And then we're seeing the same, but in reverse down at the bottom of these calculations with small cap. So the small caps are bringing in the base in each instance. So what that means is if this blue represents the average overall stock market, that means that the mid caps are helping to lift it up, and the small caps are tending to bring it back down right now. And that's where it stands from a term of capitalization. And now we can look at kind of a similar approach from a sector perspective. So here we are now. I just changed the screen to sector. We still have macro, meso, and micro. We still see the overall stock market in blue in the middle. We see a little bit of a trough effect on cash again. Again, the aggregate bonds are down here at the bottom, and then here's our international stocks. And then right here, the number one spot, we've got utilities in all three time frames. And down here, we're also looking at what's making up that difference. So consumer discretionary is coming in pretty high in each of these instances. We're seeing financials here staying pretty much in the same. The industrials are here and here, but then those industrials do fall off down to the number 10 spot in the micro. And then we see something like healthcare, for example, is jumping up. So healthcare over here on macro is in the number 9 spot, but in the number 4 spot over here on micro. So utilities holding across the board, some of the others kind of hanging in there, but we're seeing a few bits of movement. And then the other part that really grabs my eye when I look at this chart is on a macro level, we really only had 4 sectors that were helping to lift the market, meaning they were ranking higher than the overall stock market itself in that number 6 spot. We only had 4 sectors here. And then when we come over to micro, now all of a sudden we've got 7 sectors that are helping to lift it. Again, I'm not counting cash. So we've got 7 sectors that are helping to lift the overall market, running ahead of the market, and then the others coming in beneath the market. Now, what I mentioned again a moment ago, we've talked in the past about interest rates and inflation and things of that sort taking place, especially with the invasion of Russia into Ukraine. This is an interesting time, in my opinion, to look at this global wealth and happiness study that gets done each year. And this is coming from the World Happiness Report down here at the bottom of the page from 2022. And it's very interesting when you look at this today. I don't know exactly when they did the timing of this, but I would imagine that right here is Ukraine. I would imagine that all things going on has limited some of the happiness in Ukraine. That would be very obvious. But then here we also have Russia, communist country that's now invading Ukraine, right? Vietnam is a communist country. Here's China's communist. You see some of the Middle East stuff here, Iraq and Iran. Kind of all in this middle of the pack, so to speak. If we come down to the lower left, all of these countries in gray, these, if you look at the code over here, these are African countries. So when you're struggling to just put food on your table, when you're struggling to protect your family and to keep people healthy, you tend to be down here in this kind of poor and unhappy section versus the rich and happy section. And you'll notice that all these countries kind of fall on this line. It always goes from lower left to upper right. It never goes from poor and happy to rich and unhappy. It never looks this way. It always kind of works its way this way. And the reason is to get to that upper right quadrant, regardless of, what the country is, regardless of the exact political opportunities or political makeup, I should say, it's all about what are the opportunities, what are the rewards for what I'll call intelligent risk and intentional effort. And again, this is just my terminology. You can Google around and find all kinds of things on capitalism and do these countries embrace entrepreneurism and that kind of thing. All of those things help to get you up and to the right. But I'll just break it down to its very basics. If the people who live in these countries are rewarded for intelligent risk taking, and for giving intentional effort to their jobs, to their economy, then generally speaking, you're going to end up in this upper right-hand quadrant. So here's the United States. Here's Australia. Here's the United Kingdom. Here's Finland up here. Here's Iceland. Here's Italy and Spain. You'll see these countries up here in this upper right quadrant. So that's a pretty good indication of how you should be running things in your country to get you up and to the right. It shows you, I think, some of the dangers of what it means to be in a socialist country, what it means to be in a communist country, and how that brings you into this middle zone. And then worse off even yet, if you don't have the resources, if you don't have the opportunity, you end up in a very bad spot. In fact, Haiti being a great example right now of kind of being in a bad spot. Afghanistan down here, a good example of being in a bad spot today. And then obviously, as I mentioned earlier, all of these great countries coming from Africa, not having the resources, not being able to create an intelligent risk opportunity or an intentional effort opportunity. So it's going to be really interesting to watch how things continue to pan out, not to belittle the war itself, but the effects of the war in the invasion of Russia into Ukraine, and how Ukraine can hopefully bounce back and bounce out of that and create an opportunity for itself to move up in this direction in the long term. So I hope this has been helpful to you. I hope that gives you kind of an interesting perspective on how economies and countries are structured, and specifically what's going on today with capitalization and with the sectors as it relates to our U.S. stock market. Hope this has been helpful. Talk to you again soon.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.